Hi, I am Anna. I come from www.ntvforex.com. May the Salesforce be with you. Analysis http ntvforex.com News ID 742457 8/27 2024 13:27 am. After nearly a week away in Central Java and when the world reopens, I strongly recommend visiting the regions around Borobudur for a more Ubud experience than Ubud. The more things change, the more they stay the same. Last night's impressive results from Salesforce saw its share price climb by 26.0% on the day. The big tech, work from home, COVID immune business model trade is alive and well. Naturally, the Nasdaq 100 and S&P 500 hit new record highs. NBSP elsewhere, currency and commodity markets appear to be in a consolidative mode, with precious metals much the same, albeit with some serious intraday volatility. That inevitably leads to tail-chasing markets in the shorter term, with the gnomes of finance and the world's financial press desperately looking for facts to fit the narrative. Weeks like these are tiring mentally as the financial world expends needless energy justifying intraday moves and searching for conspiracies. I'm glad I missed it, discovering the joys of chicken heart and liver fried rice at roadside warungs. At least I think they were in God we trust. For everything else, there is sambal sauce. Today's data calendar is quiet through Asia and Europe. China industrial profits fell by 8.10% YoY in July, a marked improvement on last month's 12.8% decline. It hints that China's recovery remains on track. However, the low-hanging fruit may have been plucked, and much of the improvement going forward will depend on a further recovery in international markets. The Bank of Korea held rates steady at 0.50% in a well-telegraphed result, as the BOK sees little value in lowering rates from these levels, preferring fiscal and monetary stimulus to do the heavy lifting. The BOK stated that a recovery would be delayed due to coronavirus, in an impressive use of central bank state the obvious. Taking a page from the same playbook, the Bank of Japan also indicated today that monetary policy would remain accommodative until an economic recovery was in place, something they've been saying for the last 30 years. That will likely be the extent of central bank wisdom from the Asian region today, although I personally note that markets can go up or down, depending on whether there are more buyers or sellers. NBSP with Asia in safe central bank hands. Most attention will be on the U.S. data this evening and the Fed Chairman's Jackson Hole speech at 2110 SGT. U.S. GDP is expected to shrink by a mind-boggling 32.50% in Q2 QoQ. It is, though, a known unknown, as the economy was ravaged by COVID-19 lockdowns, both domestically and internationally. The world has quickly moved on since then, and as they will with the GDP data. Far more interesting will be the weekly initial and weekly jobless claims. With no new stimulus in sight from the U.S. Congress, the initial claims are expected to remain around 1 million, with continuing claims remaining anchored around 14.5 million. Neither is something for the U.S. government to be proud of, and the potential for a negative surprise on both is perhaps higher than usual. NBSP Any fallout from the jobless data is going to be short-lived Th0UGH as Mr. Powell's speech follows shortly after the release. Financial markets are expecting chairman to hint at lower rates for longer, and most importantly, allow inflation targets to overshoot to get the average inflation up. The twin goals seem incongruous though, as I can't imagine the Fed allowing the yield curve to steepen markedly. Tonight may be the first hint of yield curve control as well, just don't call it yield curve control. NBSP You could construct a bullish or bearish case, no matter what Mr. Powell actually says. If the curve is to steepen and inflation rise, perhaps you would buy US dollars and sell gold. But wait, if inflation is rising, surely that means world growth is recovering, therefore, one would sell US dollars and load up on everything else, and although inflation is zero, we are all buying gold, but gold is a hedge against inflation, therefore, buy more gold. The tail-chasing scene would be like something straight out of Top Gun. A far better strategy is probably waiting on the sidelines until the speech, let the FOMO gnomes do their worst, and see what the world looks like after the dust settles. Where did I put the Sample Asia equities edge lower ahead of Powell's speech? Asian markets are trading quietly today, with regional investors ignoring Wall Street overnight. Local markets are mostly edging lower as investors reduce positioning ahead of Chairman Powell's Jackson Hole address this evening. NBSP The Nikkei 225 is modestly lower by 0.40%, with South Korea's Kospi 0.55% lower. China's Shanghai Composite and CSI 300 have eased by 0.30%, with the Hang Seng dropping 1.05% as IPO fever abates ahead of Powell's address. NBSP regional markets are mixed with Bangkok edging higher, but Singapore, Kuala Lumpur and Jakarta all slightly lower as positioning is adjusted. Australian markets are following Wall Street though, the ASX 200 rising 0.30%, and the All Ordinaries increasing 0.40%. We expect the directionless trading to continue throughout the day and into Europe, with equity markets content to book some profits, rather than second-guess the Federal Reserve Chairman. Assuming no surprises emerge, the underlying drivers of the longer-term bull market remain as firm as ever, though. NBSP mid-range is the world on the street for currency markets. Despite there being plenty of noise over the past week for currency markets, most lie in the middle of their 2-week ranges this morning. Notably, EUR USD, USD CHF, USD JPY and AUD USD amongst the major currencies, seem to be waiting for a Federal Reserve green light, before resuming their rallies versus the greenback. One exception is Her Majesty's British Pound, which is shrugging of zero Brexit progress and is lurking at 1.3210 this morning. A daily close above 1.3270 heralds further gains to 1.3500 in the near term. Across regional currencies, the story is similar, although there are exceptions. An apparent temporary thawing in US-China trade relations has led to a series of stronger PBOC-CNY fixes. USD-CNY has fallen to near 8-month lows at 6.8850 this morning. Assuming that nothing blows up on the US-China trade front, a big if, USD-CNY looks poised to test its 2020 lows of 6.8400 sooner rather than later. Across regional currencies, MYR continues to outperform, while the SGD, THB, and PHP consolidate their recent gains with the global recovery story still on track with investors. The region's laggard, the Indonesian rupiah, is being given a helping hand by the central bank today. The Bank of Indonesia is in the market selling USD IDR this morning. Gains by the IDR remain limited though, as President Jokowi appears to have gone all in on a vaccine solving his COVID-19 problem and the ensuing dire economic fallout. Overall, currency markets are likely to remain in consolidation mode ahead of the Jackson Hole speech this evening. Oil grinds higher, but consumption fears persist. Oil has ground higher over the past week, but Brent and WTI remain confined within their 1-month trading ranges, albeit near the top ends. Hurricane-related concerns in the U.S. have shuttered production there, which has likely played the major part in oil's recent rally. However, doubts over future consumption demand continue to cap oil's rally. Those fears are well-founded, with COVID-19 returning in force to Europe and parts of Asia. A lack of follow-on U.S. fiscal stimulus and COVID-19 has torpedoed U.S. airlines' plans for mass air travel to restart as well. NBSP Brent crude fell 0.50% to $45.80 a barrel overnight. Its continued upward progress capped by its 200-day moving average DMA, which today lies at $45.75 a barrel. Brent crude needs to move through its 200 DMA and its August 5 highs at $46.20 a barrel to relight the fire in oil bulls. NBSP WTI crept 0.20% higher to $43.45 a barrel overnight, as hurricane-related weather in Texas and Florida shutters oil production and refining capacity. WTI is at the top of its 1-month range, and well clear of its 200 DMA below at $41.60 a barrel. It likely has a greater potential to spike higher than Brent at this stage. Oil markets are steady in Asia as the street watches the progress of the U.S. hurricanes and ahead of Powell's speech. The severity of the hurricane landfall in Texas is going to be the more potent short-term driver of oil prices. NBSP Gold's volatile consolidation continues. Gold had another $50 an ounce range day overnight, finishing the session 1.35% higher at $1,954 an ounce. Gold's volatile consolidation of the past week between $1,900 and $1,960 an ounce looks set to be completed, with Chairman Powell's Jackson Hole address sure to have gold breaking one way or the other. I am hedging my bets here because I believe that second-guessing the Fed Chairman's speech, and its possible market-moving effects, are a pointless exercise. Gold has edged $10 an ounce lower in Asia to $1,944 an ounce as traders saw book short-term profits from the strong move higher overnight. That said, gold should find plenty of willing buyers on dips to $1,935 an ounce ahead of the Jackson Hole address, with a break of $1,970 an ounce likely setting up a short-term test of $2,000 an ounce. For gold investors, patience will be a virtue today, and sitting on one's hands a far better strategy than mind reading and hope. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.